RSI is a popular and widely used indicator. RSI is a price following oscillator and as the name indicates, it measures the relative strength of the stock. Most analysts use RSI amongst other set of indicators they use and it is one of my favorite indicators. RSI oscillates between 0 and 100 level. Its important levels are 70, 60, 50, 40 and 30. 14-day RSI is a popular one. It is mainly used for checking momentum and oversold overbought range. Here one important thing to remember is that use of RSI in ranging market is different and in trending market is different. So before analyzing a chart based on RSI, first we must get clarity on the trend in place or whether the market is in range or not. If we make mistake in doing this, we will make mistake in interpreting that particular indicator. RSI is used to know overbought and oversold levels that emerge in short-term cycle of a long-term trending market. When RSI is above 70 levels, the stock is considered overbought. And when RSI is below 30 levels, the stock is considered as oversold. RSI tells us whether the stock is uptrending or trending down. When RSI remains above 50, the stock shows overall bullish trend. And when RSI remains below 50, the stock is in bearish trend. RSI helps us to take early entry and exit by showing divergence signal that happen between RSI and price. When RSI after going below 30 levels manages to give a positive breakout above 30 level, one can initiate a buy position. And when RSI breaks below 70 after retracing from above 70 levels, one should exit from a trade. RSI is used to know momentum. Though not primarily designed for it, RSI can indicate increase in momentum in trending market by remaining above or below certain levels for longer period. In ranging market, when RSI goes below 30 and takes support at 30, it gives an opportunity to buy. But in trending market, one must not make haste and try to buy the bottoms, and RSI can remain below 30 level for a long period. In this situation, we do not get chance to exit on rise and we can get stuck in a position for long time. We must never buy or sell based on illusion that the stock is available cheap. When RSI remains below 30, bottoms can be established at a lot lower level than our expectation. Now we will take an example and understand how RSI helps us in trading. This is the hourly chart of Nifty and here are so many uptrends and downtrends. This is uptrend. We are getting a trend line here. Now see, RSI is in oversold range and now it crosses above 30 level. Now it crosses above 50 level. This is a confirmation signal. We will buy here. We will make our buy position here. This is our buying position. Now RSI is going to overbought range. This is the overbought range and this is the oversold range. Below 30 is oversold and below 70 is overbought range. RSI is going in overbought range and when RSI crosses down this 70 level, then we will exit from our buying position. We will buy here and exit here. Again, when RSI is crossing above 50 level, this is the 50 level, we will buy our position. We will buy here and RSI now is in overbought range and crosses down this 70 level. So we will exit here. We will buy here and exit here. Similarly, this is the downtrend and RSI is taking support as at 70 level. It is not going in overbought range because now it is a starting of a downtrend, short-term downtrend. At this level, RSI is going below 50 level, so we can make our short sell position here. We can sell here. Now RSI is in oversold range and after coming in oversold range, RSI is going above 30 level. So we will exit here. We will sell here and exit here. In ranging market, when RSI crosses 70 or faces resistance near 70 or 60, we can sell. and when RSI crosses down 30 or takes support near 30 or 40, we can buy. But in trending markets, when RSI crosses above 70, it's like a car going into the fifth gear. The momentum at this time is strong and one side sharp up move can be seen. As long as RSI doesn't go below 70 and faces resistance of 70 again, we can keep long. It is advised that RSI crosses above 30, you should wait for the confirmation signal that we get when RSI is above 50. Now here market is moving in a range between two lines. This is the resistance line, this is the support line. So we can make use of RSI here. When prices are touching 70 level, they are going in overbought range and now facing resistance 70 level many times, we can sell. We can sell here. And now RSI is going in oversold range and now again facing this level second time, so we can buy here. This will be our buying position. Again RSI is going at 70 level and facing resistance 3 times here. You can see facing resistance 3 times, so we can sell here. So every time when we get a resistance near 70, we can sell, and every time when we get support at 30, we can buy. This was the case when market was in sideways trend, but now market is in trend. This is trending market, bull trend, and RSI is in overbought range. Here RSI is in overbought range for long time because the momentum is high here. So we will not make any short sell position when RSI is in overbought range because this is a bull trend market. RSI is a very useful tool, but like other indicators, RSI is also prone to providing false signals. So price analysis is still needed with the use of RSI. Thanks for watching the lecture.